So how does this impact the election? How does it impact the economy and markets? Let's bring into the discussion Stephanie Kelly, Aberdeen senior political economist, joining us from Edinburgh, Scotland. Thank you very much. I can only imagine what people across the Atlantic are thinking of our election process here in the United States. But with this news of Kamala Harris being off the campaign trail, does that impact, when you say there's a probability of a Democratic clean sweep rising 50%, put it into context for us?
I don't think these kind of news stories about COVID necessarily at the margin impact the overall probability of a Democrat clean sweep. I think really when we look at that, we're talking about two things. One is on the polling side, and in particular, you can't deny a 10 percentage point lead for any candidate in a US election, particularly as polarized as this one, I think is quite substantial at this point in the race. And then additionally, there's all those demographic changes that we know have taken place since 2016 with the fall in the non-college educated white voter community and the increase in Black voters and Hispanic voters. And that should, at the margin, be beneficial to the Biden campaign. All of that is what's driving us towards thinking a Biden clean sweep is the most likely outcome.
Stephanie, how are you thinking, as somebody who watches the polls very closely, how are you thinking about polls this time around? How are you adjusting your modeling, if at all, given what we saw in 2016?
I would say with an abundance of caution. I treat polls every time. I think I've had the misfortune not only to cover the US election last time around, but also the Brexit results here, which again, the polling was off. I think the US case in 2016 is twofold. One is actually at the national level. The polls weren't that far off. And in some cases, actually, it was really a margin of error story. I think investors tend to think about polls as a single point estimate. You've got to apply that 3% up or down, which for a pollster, they still consider to be an accurate poll. So it was more so on the state level that we had those issues around accuracy and really polls really underperforming in terms of that margin of error. I think this time around, we know the pollsters have tried to adjust their methodology, particularly adjusting for education. We know education was a big factor in terms of determining Trump votership or no, and a lack of ability to contact or take into account those non-college educated white voters. All those changes have taken place. The problem you have is you never know with polling methodology changes if you've done it just right or too much or too little. And against that backdrop, that's the challenging thing, right? So I'm going in with a really kind of strong sense that we shouldn't assume the polls are right. But with a 10 percentage point lead, it's wide enough that I feel pretty comfortable that we're moving towards the Democrat clean sweep, even if polls are out by, say, 4 percentage points, even 5.
Stephanie, I want to ask real quick. We talk about how some stocks may react positively to a Trump re-election. Some may react positively to a Biden re-election. I guess, obviously you can't predict what will happen, but I guess which side would benefit the overall market more? Would it be the sense of more stability under a Biden, or would it be the idea that there may be a more favorable business outlook under a Trump?
So I think this is a really interesting question, and it's one we've really been grappling with. I think, automatically investors usually assume that, a Republican presidency is kind of net beneficial for markets because of the tendency for Republicans to be less interventionist, particularly around regulation. However, I think we need to think about this election as investors in terms of two things. One is the macro impact of fiscal stimulus. And we know that the Biden administration in particular, under a clean sweep, would see a really significant stimulus. And it's the kind of thing where a rising tide like that should lift the boats of the market, so to speak. However, you're right to point out that there's some counterfactuals here or kind of contravening factors. For example, the focus on increasing regulation on key sectors for example, the S&P 500, right? So you will likely see increased regulation in the financial space, in energy in particular, and also in tech, although we don't know exactly what that would look like and how long it would take to come in. So against that backdrop, you really are talking about, at the headline level, maybe you get a little bit of a grind higher because of that uncertainty coming out, maybe under any election, particularly I would say under a clean sweep. But again, part of that will reflect how much pricing there is in advance. The real story is going to be around sector rotation, around kind of the benefits of fiscal for cyclicals, but also questions about, for those companies reliant on minimum wage workers, then, expectations that minimum wages will rise will naturally weigh on earnings. So it really becomes this kind of sector by sector, even company by company story.
Stephanie, how difficult is it not only to conduct a poll, but to analyze the data you're looking at when we live in an environment where people believe, QAnon and that crap? It's almost like living in a Monty Python movie. But oh no, she's a witch. I got to imagine that synthesizing your data becomes more difficult in a real world. 30% of people think QAnon is legit.
I think that's one of the challenges we have is kind of a couple of things with polling, right? Is there's different kinds of polls, and there's phone polls, there's landline polls, and then there's mobile phone polls, and then there's online polls. And I always kind of say you have to bear in mind there's a selection bias too with polling, where you have to be the kind of person who wants to answer their phone, who wants to pick it up, who wants to answer a series of questions. I'm a political economist, and I probably will be one of the people who would say, actually, I don't have time for this. So you always have to bear in mind that there's a selection bias. And then the impact of social media, we know in 2016 was quite crucial. The Republican Party was particularly kind of successful in terms of carving out a social media strategy. And we can't really measure social media effectiveness in the way that, we can measure kind of polling, but we know it's an important component, which is why we actually tend to be a little bit more cautious on the outlook. So we've got Biden winning at about 75%. Most of the main political providers are higher than us. They're at 80, 85, even 90%. And part of that is we feel that we have some of the information. Polling is some of the information, but it's definitely not all the information. But we don't have a reliable metric to understand how things like social media campaigns and information spread through WhatsApp groups is really important for Latino voters. But again, we can't measure that. So it's all these kind of bits and pieces from a really diverse country, and in reality, not a single country when it comes to the election, but 50 separate states with different demographics accessing different information.
Stephanie Kelly is Aberdeen senior political economist. Thank you for joining us on the Move.